Norman, I wanted to begin on the latest CPI and inflation prints out of the United States, with some investors now suggesting that it could be July and done for the Fed. What's your view on the trajectory from here, given the data that we've seen this week?
Yeah, we do think there's a good possibility that July is the last hike in this cycle. But as you've seen with Mary Daly, there were still some concerns in the data that was just released on the CPI, in particular on the core side. And I think the comments that you're hearing from some of the Fed governors really highlights that if they're going to make a mistake, they're going to make a mistake not pausing too soon. And if they need to, hiking a little bit extra to make sure inflation stays under control.
What's been interesting this week is that the softer than expected inflation numbers have really been a catalyst for global equities. We've seen gains in Asia and across the United States as well. So how do you trade this deflation trend that investors are now talking about?
Well, there certainly is a renewed interest in markets now because the inflation boogeyman is starting to fade. But one of the things that we're focusing on is the overall liquidity backdrop. Because alongside this inflation narrative we've seen, after the debt ceiling crisis has been averted, we've seen almost $500 billion of new liquidity come into the system via the Fed's reverse repo account. And that's going to put a floor underneath markets once again. And so we think investors need to stay with the rally that we've seen in markets here as we move through the summer.